I warned you that this past week was going to be fireworks, and that is just what we got. We had quadruple witching this week, the expiration of uh, options and futures and everything else, and just the pure volume of economic data that was reported this week. And I guess it wasn't volume wise that big, but the importance of what was reported really moved the markets both up and down. And one notation I want to talk about, and I always find this interesting, and that is just from a technical analysis standpoint. Take a look at this chart. It's there was a gap back. When was that? Looks like November 9th, between the 8th. Was it the 8th? Yeah, the 8th and the 9th of November. And today, my expectation was, okay, if we get down close enough to it, let's hit it, and then let's find our way back up. Well, it almost, I mean, not quite to the penny, but pretty close. You'd see what we did today, came right down, filled that gap, but we've left some other gaps behind, which is good news for those of us that are maybe playing things a little bit more bullish. So I just thought it was so interesting that that gap that was left behind in November was filled today, a month and a half later almost. And, you know, I'm glad it hit it because now that it's filled, it's kind of like, whew, we can move on from there. All right. So let's kind of take a look at this past week and some of the data that came out, just kind of as a reminder. We had the inflation data came out, and the core inflation came out lower than expected, and that got things kind of rocking early in the week. And the expectation was 6.1% was down from 6.3% to 6%, and that obviously drove the markets higher pretty much on Tuesday. And then Wednesday came around, and we wound up with the Fed decision raised by half a point, and it's a little strange for me because when they raised a half a point, everybody expected it to be a half a point, and even after the announcement of half a point, the markets went down, and I was like, okay, well, everybody knew this; it was going to be a half a point, unless somebody, I don't know whether people were hoping that it would be something different. Now the Fed conference, when Powell came out, Fed Chairman Powell came out, and basically said, we're going to have to keep rates higher longer. We may have to go higher than what our original target was. Well, then that obviously led to pretty much the rest of the week. Because then we got, bad on Thursday morning. We got bad retail sales data. It was down 0.6%. And, with an expectation was it going to be down 0.1%. So that was off. And that was down from 1.3% all the way to negative 0.6%. So, it just seems like everybody in a bad mood or something on Thursday, and the markets went down, and after it went down, it broke a lot of key technical point barriers. And I'll probably start adding some of those things in after I give at least the folks in this audience a chance to digest maybe some education that I found online that's free to go through. And I'll talk about that at the end of this. So that was, maybe not a ton of news, but the news was all big. The Fed rate decision, the retail sales, I think just kind of threw, like I said, everybody just seemed after the Fed just nasty. Everything just went ugly after that. Let's take a look at next week, we've got building permits. What's our consensus? 1.483 million. We'll see what that does. If it, for these, I'm just looking for anything that looks, super negative. I mean, that could potentially drive the markets down more on Tuesday, and then pretty much a non-event for the rest of the week. I mean, existing home sales, that could be significant if it comes too far out of line with the expectations. Then really you don't get anything till Friday with personal income, personal spending, durable goods orders. I'm waiting for this personal spending thing to just drop like a rock. That would be my expectation. Durable goods orders to go down. That would be my expectation when these things report. You got Michigan Consumer Sentiment Report here. So there's a few things on Friday that could really be market movers. But everybody was so negative this week. Taking a look at the investor sentiment, we're back to levels, 44.6% are bearish. I think if you were to take this survey that's sent out on Wednesday night, today, this would probably be in the 50s, potentially. And you're losing some bullishness and gaining some bearishness. So you're having people move through the cycle here. And, markets can change Monday and Tuesday before they take the next one. But if you look at the fear and greed index, now we're in fear. We've been kind of in this neutral to greed, and now we went quickly from greed to fear in a matter of 3 days. And, now, excuse me, we'll keep on this. Obviously, the market keeps going down from here. My expectation would be that now that we filled that gap in SPY, that I'm hoping at least tech will start to turn around a little bit. I'm not optimistic about tech long term, but at least for the short term, I am. And let's take a look at some of the other data that I keep track of. The U.S. 10-year, it bounced up. It's just below the 3.5% that I think is significant. As long as we stay, below that, that's good news. I'd like to see it come down. It might bounce up some more before it comes down. It could go. It still could go up, but I don't think so. I think it's going. The pressure is going to be for it to move below first this 3.228% basically. DXY, again, it had started to move in a direction. It depends, what you're looking for. The more this goes down, obviously, we seem to be maybe in a channel here. Something like that, a downward trend. I'd like it to stay below that. Maybe, if it goes up and hits it and then backs down, maybe even penetrate it a little bit. But, this goes back down. But, the dollar goes down, that means things are going to be more expensive. And, we don't need that. But if it goes up, the market tanks. So, pick your poison with regards to the way you want this number to go. WTI Crude. Again, looks like we're in a downward trend here. Take it from here to here. So it seems to be moving a downward trend. Some people are calling for it to go into the 60s here in the next, maybe even before the end of the year. And, that these things are good for the markets because inflation starts to come down and so forth. So that's that's really, well, let's just take a number of other things, maybe a couple other things. We got the VIX down here below 20. So the volatility went down, came back up, hit, you know, beyond 25, almost 26. And then we came back down again, popped up, but, ended the week up, what, $3 or 3 points on the VIX. And the other thing, put call ratios. I haven't brought this back up in a while, but there's still a lot of puts out there. I mean, that's still fairly high for the number of puts, and I'm sure a lot of people jumped into them today, thinking it's going to go down. And again, my contrarian nature is when I see that and it's starting to get to level, especially when you're up in here, that potential turnaround, especially for a contrarian trader like I am. So my final comments are basically, I've been harping on this you need to educate yourself piece. I did spend some time this week looking for a good component. I've got one out there already from ProjectFinance that'll help you educate yourself on the fundamentals really of options. Strategies is a whole different ball game. There's probably there's a strategy for every person. It's not one size fits all, definitely, with regards to strategies and options. But learning the tools first give you an idea of what they can potentially do for you. The other thing is technical analysis, and I found a place. I don't know the name of the guy that does it, but it's from the trading channel, and I'll put a link down below the options free trading. But those were two pretty good. If somebody has better ones, let me know. But the trading channel has a very good explanation. It takes about an hour and 15 minutes. You might be able to speed it up. Takes you through candlesticks all the way to, kind of the fundamentals of technical analysis. So that is my message for this week. Trying to keep these things a little shorter. Remember, there is always a better way.